The world of YouTube is pretty wild. We've gone from the very first video being one of the co-founders at the zoo.
They have really long.
All the way to amazing trick shots. Toys being unboxed.
What's happened? See what's inside.
Viral music videos. And even tips on how to do up your home.
To profitable do-it-yourself renovations.
Recognize that voice. The beauty of the platform is that there's so many creators, all with a unique perspective on their topic, so you get to learn so many different things and laugh along the way too if they're any good. There's experts in their field, great entertainers, and more cat videos than you'll ever need for a whole lifetime. However, it's not all fun and games. Behind the scenes is a big business, there's money to be made, sponsors falling over themselves to get in front of your audience, and lots of shady practices and deals, which can end up with a lot of people getting something they hadn't quite bargained for. Finance YouTube is no different from any other niche. It's a wild west of creators. The good, the bad, and the ugly. It's only really been going for just a few years, and not long ago there wasn't anyone on the platform even talking about the stock market, investing, or how to make your money grow. Fresh faces have appeared out of nowhere with seemingly all the answers for you, and the timing could not have been better in terms of the performance of the global markets, which we've been in the longest bull market we've ever seen. Finally, we all thought, geniuses are here to save us all and make us all very rich. Not so fast though. There's a few things we need to talk about in this video, which I think some of the biggest creators on this platform are either not telling you or just neglecting to tell you. And I'm not just talking about some of the big US creators either. This applies to people a lot closer to home too. And the result of all of this mess could end up with you being a lot poorer than you started off. First up, let's talk taxes. Now, I know this sounds boring, but trust me, we're not going to get technical. One of the first lessons you learn when you start investing is how much fees and charges play and how much of a role they play in reducing that growth of your money in the long term. Now, in many countries around the world, you get lots of various tax advantages when you invest your money. If we just take the US and the UK as examples, in the US, they've got accounts like the Roth IRA and the 401ks, which are basically the equivalent of stocks and shares, ISAs and workplace pensions. Each tax year, you get a set amount of your hard-earned money which can be invested, where you'll see no taxes on your gains or any dividends you receive. So in the US, the Roth IRA allows you $6,000 per year, as I understand it, and in the UK, we get a really healthy £20,000 per year across our different savings accounts that we're allowed to put in. So here's where the first problem lies. Some of the largest creators on this platform pretty much forget to mention these tax-free investing accounts and start getting into picking individual stocks using investing platforms that don't even offer them. This applies to both the UK and the US, by the way. Now, there's nothing wrong with having a play around on a platform with a small amount of cash to buy and sell shares. It's fun and you can really start to learn how things work. But over the really long term, if you end up making a lot of money and big profits, all of your hard work will end up being taxed. Taxes are going to differ depending on what country we're talking about, and in the United States, the state you live in too will be another massive deciding factor. But just consider this example. Let's say you made a huge bet on Tesla, and all of a sudden you've made £100,000 or $100,000 in profit in one of these normal trading accounts. Now, it's time to sell. The sale counts as a capital gain in the UK, so you'd have to add it on to your own income. To keep things simple, you'd probably be looking at around a tax rate of around 40% or so. In the US, things get even worse, especially if you live somewhere like California, for example. Let's say you were a pretty high earner in the top tax bracket, you'd have to pay around 37% tax across your income to the federal government, which includes the fact that short-term gains are actually taxed higher than long-term ones. So that's anything you make within a period of 12 months rather than anything longer. Then another 12.3% to the state of California for their part of your income tax. Oh, and let's not forget an additional 1% for being a super high net worth individual. Go you. Now, don't quote me on all of that, I'm not a tax expert, but that does look like you'd be passing about 50% for the pleasure of selling your stocks. It's not a good place to be in. It might be something worth telling your audiences about. Look, just please make sure you use any tax advantage accounts and seek help from a professional if you need it, because that is not me. Up next, let's talk about sponsorships. Now, as you get bigger on this platform, you start to get approached by all kinds of companies who might want to use you to promote their product. This could be anything from a new mattress, a pair of shoes, or even a VPN provider, so you can finally watch the US shows that you really like on Netflix. Even I've got emails in my inbox as a very small creator from companies right now, so you can imagine what it's like when you start getting really big. And that brings me on to today's video sponsor. Now, there's no issue being sponsored at all. Everyone has to make a living. In the same way as your favourite TV shows have adverts to keep the cost free to you, the issue becomes slightly more complicated if it's not 100% clear how they're being paid or why they've chosen a specific sponsor on that video. Or even worse, not disclosing that they're being paid to make a video, which is, in my opinion, the lowest of the low, and I do understand this is to be both illegal in the UK and in the US already. If your favourite finance YouTuber has all of a sudden changed the broker they promote to you, ask yourself why. Why is it that they don't actually use it themselves if it's so good? Does the platform actually provide you with tax-advantaged accounts? Are they regulated by the FCA here in the UK or the SEC in the US? If they've got no access to a stocks and shares ISA, for example, or anything like that, then it needs to be made really clear. Over in the US, I think things are a lot worse because I've recently seen new brokers being promoted who are all commission-free, but they make their money from the controversial practice of payment for order flow. Now, without going into too much detail, your trades get sold to the highest bidder, which may end up causing you to get an actual worse buy and sell price. Also, some of these platforms are also geared toward making you spend money in options trading, which is called CFD or spread betting in the UK. It's quite literally the dumbest thing you could do. Trust me, I know, and I've paid the price too. Most people lose money with this practice, and there's huge profits to be made for the brokers who, whether you win or lose, will make money. Just to be clear, I've got no issue sharing links to brokers to get a free share for both me and you. I do the same on my channel, but I use the platforms and share my experiences too, and I practice what I preach, using my tax-free investment accounts like a stocks and shares ISA, as well as using index funds as the core of my investing approach. I only have a very small amount of money inside general accounts, which ultimately I would like to get into an ISA at some point. Please just be careful, be skeptical. Ask more importantly, what's in it for them rather than what's in it for you. This one can apply more than just to finance YouTube, but generally to anyone who wants to sell you something to show you just how good they are and how successful they are. Let's talk about sources of income. If I show you a massive portfolio with hundreds of thousands or millions of dollars, you'll presume that I'm a great investor, when in reality, the amount of money you've invested is no measure of success on its own. I should probably repeat that line again. If you win the lottery and all of a sudden you've got £1 million worth of stocks, that doesn't make you a super investor. Just to be clear, I would still like to win the lottery though. If you make your income from YouTube, paid sponsorships and courses or anything like that, and then you invest that money into a portfolio that gets shown publicly, just remember not to be like a deer in the headlights. I'd rather be interested in how long they've been investing for, their actual returns, and what they've invested in. It's the same if you are some kind of property guru who actually makes more income per month in selling courses talking about buy-to-let properties than actually make from buying the buy-to-let properties themselves. Nothing wrong with selling a course, but there is, in my opinion, a grey area if you don't disclose that you really aren't as successful as you make out in the thing you're creating the course for in the first place. And that brings me on to the sponsor of the video. This video is sponsored by... Sorry, I thought I'd try and trick you again. Only kidding. Just remember on this one, we've literally been in a period of unprecedented stock market growth fueled by US stimmy checks and money printing on a level never seen before. Of course, stocks go up when nobody has anything else to spend your money on. It doesn't make someone a guru because they've made a quick buck on a speculative bet. Long term, we both know what happens. Check back here in 10 to 20 years and you'll see who's left. This leads me on to this point then, and it's probably one that can't be stressed enough. These guys, me, you, anyone else on this planet has no idea what the market's going to do, which stocks are going to rise or dive in price at any given time. We can make bets, we can gamble and speculate, but we're only going to be right a handful of times. There's so many factors at play and everyone's playing a different game. Some people are in for the long term, some for the short term, and some are just in for a few seconds. Every day the news channels need something new to talk about that are frankly irrelevant to long-term investors who genuinely want to build long-term wealth. If you do any research into the topic of investing, you'll find few interesting results from some of the academics who've actually studied this. Frequent trading and going all in on single stocks has a negative return on your portfolio. Buying and holding the market beats most professional money managers and actively managed funds. And also the gains from most of the stock market comes from such a small number of stocks that your chances of being successful are so slim in the long term if you do try and pick them. So many of these companies get promoted today as the next big thing by some of these creators, but who knows what will happen to them in the long term. I do find it weird that some channels obsess so much about individual companies. It's almost cult-like. I don't see Warren Buffett fanboying over CEOs of companies like some people on this platform and speculating about how he's going to 10x his money in some penny stock which hasn't yet made a profit. Can you even imagine that? That would be pretty funny. Just look out for personal biases, people with skin in the game, and really step back for a second and ask yourself why they're making this video in the first place. There's so many psychological biases we have as humans. We actively seek out opinions that reinforce our own. We're biased towards events that are most recent compared to ones that happened a long time ago. And we're also biased towards stories that we create to justify our own actions. Don't take my word for it. Find out for yourself. Is that the takeaway message then from this video? Go find out for yourself. Well, partly. It's just a reminder from me, a random guy on YouTube, that you should remain skeptical at all times. Question the financial motives of some people and try to seek out as many sources as possible. I realise that this might be sucking eggs for some people and seem quite obvious, but I also know how easy it is to get sucked in and start to trust someone implicitly that you think they can do no wrong. There are so many great creators on here with your best interests at heart, but sometimes they can get muddled up and get mixed into some of the more shady stuff. Remember that anytime someone may recommend or say that you should do something, ask why they might be saying that in the first place. Does that person benefit from you doing that thing? Do they get a lot of money, and how are they rewarded? Is what something is being said for entertainment, or is it actually informative, and is it really relevant to you as a long-term investor? We're all biased, we all have our own lives to lead, and some people run their business on this platform too. I can't count the amount of times I've found amazing value. Anything from fitting a new toilet flusher to working out how to reset something by using YouTube. I'm sure that I'll make plenty of mistakes and really bad judgments in the years ahead. Feel free to hold me accountable, and I hope we can all hold each other accountable in the same way too. I've got no issue with making mistakes or others making them, but it's really important to deal with them in the right way, admit where you went wrong, be humble and have some humility. I'm sure we can all agree that we prefer that rather than more long-winded justifications about that mistake. If you're not careful, you may end up being an elected official claiming that an event with multiple people who joined together in a room to celebrate someone's birthday wasn't a party, more of a cake ambush.
He, as far as I can see, he was, in a sense, ambushed with a cake. They came to his office with a cake, they sang happy birthday, he was there for 10 minutes. I don't think most people looking at that at home would characterise that as a party.
It's a slippery slope. But just be careful out there, it's not financial advice. If you've enjoyed the video, drop me a like, subscribe for more, and I'll see you in the next one. Until then, stay safe, and as always, happy investing.